Now, just before you go, Daniel, earnings from Goldman Sachs and Netflix have rallied Wall Street this week.
What earnings? I'm not hearing.
Okay, Daniel, I was asking that what earnings on the European markets are investors tapping, and what earnings are generally grabbing the attention of investors?
Well, right now, investors are a little bit relieved, I would say. We have heard statements that the United States might even agree to talk to the WTO about a possible tariffs with China. So that's making investors a little bit relieved, though the blue chip index DAX right now is in a minus situation. We are down right now about 12 points, kind of the same situation that we have also seen yesterday here as well. So that's one topic. Then investors were also very closely monitoring what U.S. President Donald Trump stated yesterday when meeting with Japanese Prime Minister Abe. He was again stating that he is very much open for talks between the United States and North Korea, though still not clear when all of this is going to happen. So the geopolitical tension is still overshadowing all what's going on at the markets. Mostly we are getting right now, you just mentioned it, numbers from the United States. Also, those numbers we're most likely going to get today and tomorrow seem to be good. So that's not really a big concern right now for investors.
Well, thanks a lot, Daniel. And don't get too hot with the weather.
Trying.
Now, in the U.S., stock futures pointed to a rise at the open on Wednesday, putting the Dow on track to build on an earnings-driven rally that has taken it back into positive territory for the year. Investors are set to get a fresh round of corporate results for this session, as well as the Federal Reserve speeches and, of course, the central bank's Beige Book report. The Dow Jones Industrial Average futures rose 0.51%, while the S&P 500 futures added 0.4%. Nasdaq 100 futures tacked on 0.27%. The markets in Asia closed higher on Wednesday as investor confidence firmed on the back of Wall Street's advance following strong earnings. The gains also came amid lingering concerns over trade-related developments. In Japan, the Nikkei 225 rose 1.42%, and the broader topics added 1.14%. Across the Korean Strait, the benchmark Kospi advanced 1.07%, driven by gains seen in manufacturing stocks and financials, among others. Australia's S&P ASX 200 edged up 0.34%, as a slight decline in the heavy-weighted financial sub-index was offset by gains seen in materials, energy and consumer names. Elsewhere, Hong Kong's Hang Seng Index closed higher by 0.74%. Mainland markets finished today in positive territory, with the Shanghai Composite erasing losses seen earlier to close up 0.8% at 3,091.31. The Shenzhen Composite rose 1.08%. Away from the markets now, South Africa's headline consumer inflation slowed to 3.8% year-on-year in March from 4% in February. This is the lowest figure since January 2011. Data from Statistics South Africa shows inflation slowed to 0.4% in March from 0.8% in February. Core inflation, which excludes the prices of food, non-alcoholic beverages, petrol and energy, was flat at 4.1% year-on-year, while on a month-on-month basis, it slowed to 0.7% from 1.1% previously. Meanwhile, the International Monetary Fund has lifted South Africa's economic growth forecast for the next 2 years, citing the election of a new political leadership. The IMF warns, though, that growth could underperform if no economic reforms are carried out. In its latest World Economic Outlook, the Washington-based lender raised its 2018 forecast of gross domestic product to 1.5% for 2018 and 1.7% for 2019. Compared to previous forecasts of 0.9% and 1.8% respectively. South Africa's economy grew by 1.3% in 2017, compared with a revised 0.6% in 2016. The IMF says business confidence is likely to gradually firm up with a change in the political leadership, but growth prospects remain weighed down by structural bottlenecks, while the lender says that South Africa's economic growth would average 1.8% between 2020 and 2023, well below the country's target of 5% annual expansion needed to dent soaring levels of poverty and unemployment. Well, there's more news from South Africa, but this time the Auditor General said has terminated all contracts with embattled auditing firm KPMG over a string of recent scandals. Kibi Mokwetu says recent media reports relating to the external audit of VBS Mutual Bank and the conduct of KPMG audit partners are some of the reasons that prompted the decision to withdraw all KPMG audit mandates with immediate effect. KPMG's South African unit is flying in troubleshooters from around the globe and hurriedly meeting clients to stem any further loss of business after becoming embroiled in 3 evolving scandals. Over the past 8 months, the auditor issued a public apology for work done for the politically connected Gupta family, withdrew the findings of a report about the country's tax authority, and interrogated staff who signed off on VBS Mutual Bank's accounts before it failed. In meetings over the weekend in Johannesburg, the directors came up with ways to convince its customers that the audit firm still deserves its fees, but that hasn't stopped the auditing firm from losing one of its biggest clients. And let's go to Kenya now, where President Uhuru Kenyatta says his country could modify or scrap a law that caps commercial lending rates. President Kenyatta recognizes that access to credit for small and medium enterprises had dried up as a consequence. Kenya capped commercial lending rates in September 2016 at 4 percentage points above the central bank's benchmark rate, which now stands at 9.5%, in an attempt to limit the cost of borrowing for businesses and individuals. Still to come on Business Incorporated, the International Monetary Fund keeps the 2018 and 2019 global growth forecast unchanged. Do stay with us.